Hello everyone and welcome to this morning's Forex session. Thank you so much for taking the time out to come and join David and myself for a look at what is going on in the Forex market, hopefully to see if we can catch some nice moves this morning. But as always, before we start, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Right, let me just pop that down out of the way and move that out of the way. And before we start looking at the charts and see what's going on, let's have a quick look at what's going on in terms of economic news today, releases, and what the sort of sentiment in the market is generally by having a quick look at investing.com. As those of you who come regularly will know, I have at least 3 economic calendars, starting off with Forex Factory, which is a great calendar, but doesn't necessarily have every single item of news. That do obviously have the most important ones. And the one standout release today, or event if you like, risk event, is the ECB, which is at 1:30, and then obviously with the 12:45 is the actual announcement of the statement and the interest rate decision, and then we have the conference at 1:30. And we all know that that always causes, particularly more so the press conference, when Lagarde starts to speak, and we have to try and the market tries to decipher what she may, what she may say one thing, but what does she actually mean? It also coincides, as we can see here, with advanced GDP in the US. So it's quite it can be a bit of a torrid time around 1:30, and it also is at the crossover. So we've got the New York traders coming in. It's one of these times where you're going to get a lot of cross flows, and how volatile it's going to be, you can never predict ahead, but all you can say is if you are in a trade and you've got some profit, then and you're an intraday trader, then it may be prudent maybe to close out and then wait until the dust all dies down a bit, and then see where the currency pair goes. Then it goes on from there. Right, financial juice, what have they got to say? Let's have a look. They, as I said, they're a little bit more comprehensive. They obviously highlight the same events, but as you can see here, they also they take perhaps a different view on the impact that other items of news can have. The calendars don't always, they're not consistent in terms of what they consider to be high impact. Obviously, things like the ECB, central banks announcements, you will find consistency across there. But on some of the other releases, not necessarily. So you have to, you just have to see what's happening on the chart basically, and be aware, particularly if the release is going to impact one of the currencies that is in your, the trade that you are in the pair that you're looking to trade. We've also got the jobless claims. You can see here a financial juice. They put a red flash next to US jobless claims. So as I said, you really have to just play it by ear, as it were. And also the other thing is the PCE, which is the Fed's preferred metric for inflation. I don't think it's on a Forex Factory, or if it is, let's have a look. Is it over here? No, the unemployment claims here, but they don't mention the PCE. Those of you who are on our program or who've come along regularly, or who read any of my Forex analysis and comments online, will know how important the PCE is. Let's have a look. My last calendar is the trading economics, which was probably the most comprehensive in terms of in releases and events. And again, you can see here what they have highlighted. And they haven't actually highlighted the PCEs, but they've got the pending home sales as potentially impactful, as it were. Probably much more so on equities than on Forex. Right, having a quick look around, they're kind of limping up a bit, as it were. Pardon? yeah, the Nasdaq is as well. It's all, they're all trying to sort of stay positive, as it were, but not necessarily reflected in what we normally refer to as our risk currencies and our safe haven currencies, because if with indices climbing higher, we would have expected the certainly the yen to be falling, although to be fair, it is sort of looking as though it's curling over. Right, this is the hourly chart for the CSI, where we look at where the individual flows have been going into the individual currencies. And really what we don't want to see is all these sort of bunched in the middle here. There are moves going on, and the moves will pick up as we go into, as the London Open comes on board, and the activity picks up, as it were. But there's no really nice sort of big divergence on this chart to tell us that for potential for a reversal trade, or even sort of a continuation. So it's all a bit sort of how can I put it, a bit desultory at the moment. And we know it's desultory as well, because by looking at the matrix, we look at the values next to the pairs. The currency strength indicator, or the currency flow indicator, picks up the strength of flows into the different currencies, and also the weakness of the currencies. And what the matrix does, it then pairs it and says, well, where is that most strongly reflected? Which are the weakest pairs and which are the strongest pairs? And what we want to see on an hourly chart, we certainly want to see values that are higher that we have here at the moment. We've got -16 down here, and we've got +22 at the top. They're not very impressive values for this particular time frame. So it just tells us that yes, there's stuff going on, but there's the momentum hasn't sort of come into the market yet, and we can see that because the lines are kind of all over the place. The pound especially is sort of all over the place. What we want to see are nice strong lines, lots of divergence, preferably with symmetrical divergence, in the sense that one is going up strongly and one is going down strongly. But we just have to be a little bit patient. What I also want to highlight on this chart as well, I'm just going to take some of these lines off. Because yesterday was the Bank of Canada, and today we've got the ECB. And what's interesting, yesterday, this was the Canadian dollar, which was actually selling off quite nicely most of the morning against all its pairs, as it were. Then come the BOC actually came in with a very unexpected decision. And the decision basically was that they're not going to taper their bond buying program. They're just going to stop it. That's it. It's ended, and the currency absolutely rocketed. And in fact, it was actually in one of the euro was one of the cross pairs where it was very, very strongly. There was a really nice trade came in on that announcement, and that was actually against the euro. But the reason I've highlighted the what the currency was doing yesterday is because it really does pay to keep note of what a particular currency is doing when that central bank is due to report. Now, of course, we've got the ECB today. If it's kind of going sort of sideways, then the kind of market's not really sure what's going to happen. But I don't know. It was very odd yesterday. The Canadian dollar does, from our past experience, before the BOC announcements, it can sometimes be in one of these extreme positions. And I think it's one of the few currencies where at an extreme, it can provide a really nice trade once on a reversal. It doesn't always happen, but from memory, from some of the webinars that we did and some of the material that we put in the Forex program, David, do you remember before big announcement, the Canadian dollar can often provide some really nice trades, particularly if it is an extreme. Now, with the euro at the moment, I'm not sure it is actually going to get to an extreme before the ECB announcement, but it's just something to be aware of. When you've got a major central bank just see what's happened, see what's setting up, if you like, in terms of strength, relative strength and weakness, and just monitor it, because sometimes, you can take advantage of what is happening before the release, and even once the release has come about. And the Canadian was a really nice example of that yesterday. I'll just pop these back. I think David said there's some buying that's certainly come into the pound. It looks like it has. This is with all the versions of the CSI, you can just take off the other currencies and just see what is happening on the individual lines. Then you can highlight the pairs, and this will tell you, where is that flow going to, because that's what we want. We want to go with the flow. It's going with the flow in all asset classes, but particularly so in currencies, because currencies, the currency market, the Forex market, is one of mean reversion. And there are these opportunities in all time frames, from the fastest to the slower ones, where you get these oscillations. And as I said, we want to try and pick up where that flow is going, but because it's obviously a pair, we want to try and pick the pair where there is the highest probability of a trade, because although they're buying the pound at the moment, it's not quite universal on this time frame. And certainly when the lines are moving in the same direction as they are here, with there hasn't been a divergence on the cable yet, it usually means that it's in congestion. So these indicators, they give you so much information even before you start. Looking over at the dollar index, we've got it pretty much, it's sort of range bound at the moment between two important levels on our Camarilla. We've got the R3 and the R4. And what's also not very encouraging in terms of trying to trade the majors is that the range is very narrow. It needs to first of all come out of this range. Whether that happens this afternoon with the GDP, again, we just have to be patient. But as we always say, this is about levels, this is about flow, but it's also about levels, because levels tell us not only where a pair is likely to reverse, to pause, it is heading to, but when a pair is trading within certain levels, the levels also give geometry to the chart, in the sense that it highlights range bound, congestion, and when you do get congestion, and if it's a very narrow range, then again we have to be patient. Now this is the daily chart, but what the daily chart tells us is what kind of price action we can expect on the faster time frame. So if a pair, or in this case the index, is trading in a narrow range, and we've got, at the moment, it's like a doji candle here. It's, you've got a small body, you've got wick to the top and the bottom. A doji is indecision of itself, but when the and it's quite narrow. What does that tell us? What kind of price action do you think that is going to be? What kind of price action will you face on the faster time frames, as opposed to when something is moving in, it's going up strongly or it's going down strongly? Now I appreciate within these big candles, price will be going backwards and forwards, but there is a clear sense of direction, and that's what I'm trying to say. If the daily chart, there is no clear sense of direction, that is going to make it not only tricky for this time frame, but also very, very tricky on the faster time frames. Right, it looks as though this is going to be looks like the pound. I'll pass over to David, but before we do that, can I just highlight the EuroCAD, because the EuroCAD is one that I actually wrote about yesterday and had a little go in it myself, just to highlight what I meant by the, where am I? EuroCAD. This is not the one I want. Hold on. I think I'm gonna have to scrunch it down a bit. Yeah, this was the euro. This is what I was trying to say was, the Canadian we saw was very, very oversold, And then when the BOC announcement came in, market was sort of quite surprised. There was a sudden rush into buy the Canadian, and it was really, really strongly picked up by the Euro Canadian, and that was the result of the trend. And what can often happen with central bank announcements is that some of the strongest moves or some of the less volatile moves can be found in the cross pairs. This was actually the move yesterday. We did have volatility, as we can see here. We have volatility going up, and then we actually had a gap down because it was such an unexpected announcement. We've got, as I said, we've got the ECB today. Keep an eye on what the euro is doing. If it gets to an overextended, if it gets overextended on the CSI, if you have the CSI, in other words, it's very overbought or oversold, it could be setting up. You know, what I'm trying to say is the technical picture is perhaps anticipating what is, what is going to be said in the press conference or the statement, or the central bank is going to do something that is unexpected. Doesn't always happen, but when it does, it can actually produce some really, really nice trades. Right, I'm going to pass over to David. You've been looking at the pound, haven't you? Yeah? All over the place. Okay, fine. And while he does that, I'm just going to look at my usual pairs that I have a look at. Let's have a look. I still don't like these values. There's one other thing we were going to touch on today, but probably not in any great detail, and that is there's some really important things going on in the bond market. Those of you, as I said, who have our program will know we do watch the bond market quite closely, what's happening with the 10-year yield, to give us a view on sentiment, because sentiment then is reflected in what happens in the currencies and the currency pairs, the risk currencies, the safe haven currencies, but it's a little bit complex at the moment, and I think we'll do that maybe the next time that we are here. Right, can I pass over to you, David, now that London is done and dusted?
Hi everybody, good to have you here this morning, and a warm welcome from me. Anna was on MT4. I've got NinjaTrader, I've got TradingView on another terminal, and I've got TradeStation down here at the bottom as well. Focus very much on the pound at the moment. This is on, I've got this on 10-minute. This is the pound that's rising strongly. Got the yen that's falling strongly, also against the CAD. So I've got the pound yen on this workspace. I've got the pound CAD, I think, on TradeStation, yeah. And as always, the important thing to remember when you're coming into the London Open, we are 6 minutes in, and when you see these sorts of moves, these very fast, dramatic, full of momentum, as you're coming into the Open, what you're expecting, anticipating is volatility, possibly congestion, possibly even a full-blown reversal, but certainly lots of price action, definitely some whipsaw price action. And you're looking at it from the concept of volume as well. You can see down here, we've got a volatility trigger. This is on 5-minute. We have one just prior to the open as well here. So there's lots of volatility around. And indeed on TradeStation, I've got radar screen here. This is all 28 pairs. Only got them on 5-minute. These are on different time frames to the right. So I've got the 1, 3, 5, and 10 on that workspace. But you can whiz through these very quickly, and picking up the pound, obviously what we're looking at here, we've got the trend monitor, which is in the radar screen. We've got the trend line here, and we've also got the volatility trigger here as well. So you've got all this information on all 28 pairs. And then down at the bottom here, I've actually got a yen workspace, and you can see pretty clearly that across the yen complex, the trend monitor is blue, the trend dots are blue. So, you know, it's all looking positive at the moment. And the reason for that is if I pull over the trading view, there we go. This is basically on 5-minute. This is top left is the pound. So we've got 5-minute for the pound index. We were in congestion. coming through to this strong move prior to the London Open. You might not be able to see it, but on this candle here, which was just after the open, there is actually quite a big wick to the upper body, and hence the reason we're starting to see this congestion build and maybe possibly even a reversal. So that's on the pound. And this is where I always start. This is the yen. Okay, so we've got yen congestion. Yen is starting to fall. Okay, so looking at, you put those two together, you've got a move on pound yen. Down at the bottom left, this is the dollar index. Dollar is doing virtually nothing at the moment in congestion, not going anywhere. Doesn't mean there wouldn't be a move, for example, in cable, where you've got a strong buying of pound and really very nothing on the dollar. But the actual momentum moves are going to be in pound yen, and you've also got the euro here as well, which is falling away quite nicely, not dramatically, but certainly to the downside. So that just gives you a complete snapshot. And obviously, when you look at these things, you wouldn't be looking, for example, to trade euro yen right now, because the yen and the euro are moving in the same direction. So you don't even need to look at a chart to know that on this time frame, at least on a 5 minute and probably sub 5 minute, it's in congestion, it's not going anywhere. And of course, that will also be reflected in terms of the CSI, which will show you the two currencies, the individual currencies, moving in, broadly speaking, the same direction. And that's the power of the currency strength indicator. It gives you all this information intuitively. This is actually the cryptocurrency strength equivalent, but in the same way, it just gives you that information about the buying, the selling, what's strong, what's weak. Are we in sideways? We've got ones moving firmly higher, firmly lower. The difference with the cryptocurrency strength indicator is that these are actually the cryptocurrencies themselves against Tether, which is the US dollar equivalent. So the red line is the dollar, and the cryptocurrencies here are moving. And generally they will, in terms of cryptocurrency world, they will tend to move pretty much en masse. Very, very different from the currency world. I just want to show you this because Anna touched on it in terms of the currency matrix. The difference with the currency matrix on TradingView is that we actually incorporated these highs and average highs to the matrix. One of the questions we get asked a lot is, what is the meaning of the numerical values on the currency matrix per se? They don't have any meaning in the context of significance from a numerical value. What they are there for, first of all, was to allow us to develop the indicators such that the currency pairs are ranked one another, and therefore we can incorporate them into a ranking ladder through that numerical value. So they don't have a value as such, but the one thing they do have is that obviously 0 is the midpoint down here. So when we're in right down the bottom here, you can see, here we are down the bottom here. You can see the bullish sentiment, but the value that you see at the top here is the important thing. And what we've incorporated here is the all-time high and the average high to give you a sense, very much like the CSI. Excuse me for a moment, hold on. Very much like the CSI, where you get to a stage where you can see with the 80-20 or the 70-30, where the currency is getting to a potentially overbought or potentially oversold. And that's why we've incorporated these numbers to actually give you a sense of where the pairs are on this time frame. We're on 5 minute here. So we know for a fact, we're pretty much up at an extreme because we've got the all-time high here. And this is, I think, is over 7 bars look back, something like that, maybe 14, but I think it's 7. And the average here. So you get a sense immediately of the extremes, of whether we're at an extreme, approaching an extreme, well off an extreme, and the same down at the bottom here as well. So you've got -10 and -18. So we know for a fact that in terms of the currency matrix, at any rate, we are at or there or thereabouts at extremes. Now that feature that we built into the matrix on TradingView, we will actually incorporate that gradually across all the other platforms. So you have it on NinjaTrader we're working on at the moment, TradeStation and MT45. The other one thing very quickly I want to show you is the currency heat map here. Again, this is on TradingView. It's very different on TradingView because you'll see instantly, those of you who have the currency heat map will know that on the other platforms, it's fixed. You don't have an option to change the timeframes. Here you do. You can choose whatever timeframes you like, and I've got 1, 5, 10, 15, 30. It's just a unique aspect of the script for TradingView that allowed us to create that. I don't know whether we'll be able to create it in the others, but we will do our best and see what we can do there. So I just wanted to highlight that. Okay, let's see what's going on. The pound, this is not unusual, and this is why we always say when you're in a position, maybe you took advantage of this trade, you saw the pound moving strongly, and you thought, great, I'm going to jump in. As soon as you get to look at it, I mean, it's almost bang on 8 o'clock. It's starting to reverse. Let's have a quick look at the multiple CSIs, which I've got over here. Let's hop over there, down to the currency strength multiples. There we go. Let's wait for them to load up. And I've got 1 minute, this is 3 minutes, I've got 5 minute here, and this is over on 15 minute. It's already rolling over on 1. On the 3 minute, it's rolling over as well. It's starting to roll over on 5. And on the 15 minute, it's still rising. And that's a facet of trading that you have to accept. And you've got to, the analogy that I've used many times is of a blinkered horse. Horses are blinkered because they get distracted, and therefore the owners and trainers will put blinkers on them to focus their attention on the finishing line and not to get distracted by horses alongside. And in the same way, in a similar way, it's kind of what you have to do in trading. You've got to decide ahead of time what it is you're trying to do. Are you trying to scalp this market? Are you in on the 1, 2, 3, 4, 5 region? Or are you going to be holding this longer term? Are you on the 15 minute up to the hour? Or are you looking at this from a daily perspective? In which case, all of this is irrelevant. It's because it's of no interest to you. If you're a daily trader, what's going on the 1, 3, and 5 minute, there's really very little consequence. You'll certainly be interested perhaps in what's going on the hourly and up, maybe the 4 hour, something like that, but you're not going to be interested in all this noise level down here. But this is all tradable stuff. To a scalping trader, this was a really nice move. So it's, as always, it's focusing on what you are trying to do in the context of that particular position. That's not to say you can't have different positions in the market. You can. If you are going to do that, then I would suggest that you have different accounts. You have a scalping account and you have a longer term account, because otherwise you will confuse yourself. And it's so easy to go in on one trade. We've all done it. You go in on one trade on one time frame and it doesn't quite pan out. So you kind of move down the time spectrum to the slower time frames. You start looking at, oh yeah, actually, well, I think I'm going to be okay. I think I'll stick with this one. We've all done it. It's very easy to slide into it. You try, as I say, you have to try and blink yourself, say, okay, what is it I'm trying to do? If it doesn't work out over 3, 4, 5 minutes, I'm out, on to the next one, and so on and so forth. It's so easy to roll that over into a slower time frame. But basically, this is what's happening. The reason we've seen those strong moves is because at the time we had very strongly rising pound, strongly falling yen. That was nice. That's now kicked up. So these two here are now traveling in the same direction, hence the sideways price action. Pound yen was a nice move because the yen was falling nicely, as I showed you over on TradingView. So that's been reflected there. We've got some decent Aussie buying coming in here. We've got decent Aussie buying, New Zealand buying here. The dollar, as I said, is really just going nowhere. It's sort of red line flapping around all over the place, really not going anywhere in particular. Just go back here, excuse me. And in terms of let's just move that out of the way, get that out of the way, there we go. In terms of the daily, this is what is shaping up in terms of the daily. It's starting to look a little bit fragile, whilst, yeah, there is selling of yen rather, and some support. It is looking fragile, and the reason that the yen complex is looking fragile is because the sentiment on US markets is looking fragile too. This is basically what we've got. We covered it last night. If I take the YM, the Dow as an example, yeah, it's, we're up a little bit this morning, but you've got this catenary price action. You've got a volume falling away. You've got effort going in with very little result. You've got weakness here. Again, effort and result, it's trying to move higher, and it's just the market is not receptive. We had a down day yesterday on decent volume. There is support in here for sure, certainly from a price-based perspective. But in terms of the general look of that particular chart, it is looking fragile. We did a post last week about it. The NQ rushed up yesterday, but then closed substantially lower off the highs. So we had, that was the day, the prior day, decent volume under there, really trying to rally, but closing back near the open. Again, another strong rally yesterday, but the volume just pushing higher, and it's come back down again. It looks as though it's going to have another run at it, and constantly, we've got this level here, which at 15,700, which is being battered, and it really cannot get through there. And as Anna said, there's an awful lot of pretty heavyweight stuff around the fundamental markets in terms of bonds, in terms of inflation, in terms of what are the central bankers going to do. The BOC yesterday was a surprise. All the banks have got to consider this, tapering inflation. Obviously, the pandemic is still hanging around there as well, et cetera, et cetera. So there's a whole bunch of things which are really, really coming into a confluence of what could actually be a quite significant reversal. Not seeing it at the moment, but it's certainly shaping up to certainly short-term weakness in terms of a daily context at any rate. Just go back into Forex. Let's just go ahead and have a look at the majors. This is a little majors matrix that I would urge you to have, because it just gives you a snapshot of the matrix on the dollar. So we've got pretty much all the majors here. And it just gives you, let's just reload that one. There we go. It just gives you a context for what is going on in terms of opportunities trading the majors. And of course, what you should expect to see is universal price action, because if the dollar is moving strongly in one direction, what you want to see is that reflected across the complex with all the pairs moving in a similar direction, and you'll see it instantly. Obviously, you've got pound dollar will be going higher with Aussie dollar, with euro dollar and New Zealand dollar, and these two will be going in the opposite direction. Well, at the moment, we're not seeing too much. It's sideways. You've got a lot of volatility. You've got volatility here on dollar CAD. You've got volatility here on the Aussie dollar. You've got volatility down here on New Zealand dollar, and it really is there's not a lot going on in terms of the dollar at the moment. So there's nothing as a great opportunity to trade the dollar. So it's just a very quick way of giving you a view on the dollar. And in the same way as here, I've got the yen complex, but this could equally be a dollar complex, could be anything you like. And what this tells you instantly, it tells you where the volatility has been triggered. It tells you what the color of the trends are, what the trend monitor is doing in terms of color. And of course, also the beauty of this is you can flick through this very quickly. So I can go through this, almost in a few seconds, just pull them up. Here we go. We get a complete array of what is going on. You've got the volatility here on the Aussie yen on 5, straight into congestion, no great surprise. And we've got volatility on 10 here as well. And it's all looking, a bit sideways at the moment. Let's go and have a look at something that's negative at the moment on EuroCAD, see if that's a decent opportunity there. Euro Swiss. And it's just a really, really quick way. And that's the reason we developed the radar panel over on TradingView, so that you can use it in the same way. And it's why we're working on NinjaTrader with the Market Analyzer to produce a similar sort of thing, where you'll be able to load up all the quantum indicators and indeed any others, so you can actually get all this visual information. And of course, these are all symbol linked, so it just makes it really, really quick and easy to flick around and see what is going on. And of course, I've got the multiple CSIs on here as well alongside. Just drop that down. Let's go back on to the currency pairs again, see what else we can find. Okay, pound yen is coming off quite nicely in terms of the 15-second. Let's go up to the minute. We get the volatility, lots of volume coming in. This is 8 o'clock our time, so this is the London Open. Nice thing with Ninja, it is a bit of an issue with MT4 and MT5, where you're constantly trying to work out where you are with the 2-hour delay that you generally get on the platform. But in terms of Ninja, it prints in real time, so it's very, very easy. Let's go down onto there we go, onto the 5-minute. Here we are, 8 o'clock. In we go, nice trap move. And what volatility is all about is it's just a compression of time. It's nothing it's no great mystery. It's not some black magic event. All it is a compression of time, because all that's happened in that bar is that the price action that would normally spread over 10 minutes, 15 minutes has been compressed into one candle over 5 minutes. So it's just a compression of time. But what the power of compression of time from a market maker perspective down here, why they do it is because it will draw you in on the fear of missing out, because the one thing that will happen as that price action snaps into place, the market moves dramatically, very quite fast. You as a trader will look at it, you want to jump in, oh, I'll make some easy money here, it's moving quickly, I've been sat here for the last 20 minutes, nothing's happened, now we've got some price action, good, let's jump in you go, and snap, you know, the jaws close and you're caught in congestion or you're caught in a reversal. The London Open is an absolute classic, as indeed is the crossover at 1 o'clock into US session, as indeed is the London fix at 4 o'clock. They are the opportunities, they are the points of the day at which the market makers will make an absolute bucket load of money, purely based on the fear of missing out. The market will snap higher or lower, you will jump in, you'll get trapped, you'll either sit in congestion or you get taken out. That's it, end of that position, on to the next one. More money for the market makers. It is so simple. You might think it's unfair. Well, in a way it is, but then if you were a market maker, you'd do exactly the same thing. So, you know, don't moan about it. It's just a fact of life. If you're aware of it, just, you know, please just take note of it. Every single day of the trading week, it occurs. It's very, very simple. And the way the indicator works is very simple too. And the power of it is that not only does it work based on average true range, so it's looking at whether the price action you're seeing is in line with what you should expect. In other words, you know, this is what you would consider to be a typical price action. This is atypical. This is not typical of the general price action you should expect. Therefore, we've moved outside the average true range. So it's signaling that with these little purple arrows. But the beauty of it is that it triggers in real time. So as soon as that dynamic has been hit, that metric has been hit, then the indicator will fire and it'll trigger. So if you don't have to wait until the close of the bar for that to appear, and if you're in a position, I've said thousands of times on these webinars, if you're in a position, you got profit, you got in lower down here, maybe on this breakaway through from the volume point of control down here, through one of these levels, this was resistance, then becomes support. And look at the speed it moves up through this low volume node. If you've got in somewhere down here and you've got profit in there, fine, just take it, close out. Because if the market continues higher, fine, you've lost nothing. You've maybe lost a few pips in here, so what? It's irrelevant. There we go. Can I hand back to you, darling? Okay. All right, Anna's just sorting something out, so we'll stay here. It's yeah, it's all a bit lots of volatility candles as normal. Let's go and have a look at the currency matrix multiples. I'm going to have a look at, I think, what the currency futures up there as well. This is on currency matrix on, I've got this on multiples, I've got this on 1, on 5, on 10, on 15. I haven't got the features set up there yet, but we will do. Let's isolate on, let's have a look at the CAD. Okay, so the CAD on 1, you can see there, that's what you're looking for the whole time. You are looking for the sentiment towards a particular currency to be universal. It's what I refer to as a full house card playing analogy, but you know, that's the way we tend to refer to it. So in other words, on this very fast time frame, the Canadian dollar is being sold universally, and therefore if you're trading the Canadian dollar in this time window, you are trading with the universal flow of the market because everyone else is doing the same thing. It's like a river. You are paddling your canoe in the same direction as everybody else. It's as simple as that. Let's have a look at it on on 5. Okay, on 5, it's less clear cut. You wouldn't expect, unless there is a very, very strong move, you wouldn't expect to see it. But what you're looking for now is, are these pairs going to, is the CAD yen, for example, which way, what direction is it taking in the context of what is going on 1 minute? Let's go up to the 10 minute, isolate it out there. And it's not clear at the moment. So what you're looking for in terms of all these indicators and the general concept per se is that you are looking for whatever it is that's going on the 1 minute. If it is going to generate into a strong trend, then you want to see it move into your slightly slower time frame that you're looking at, and on into the next time frame, and on into the time frame beyond that. And that's just a facet of trends. The trend, a trend reversal or a trend continuation, will start in your fastest time frame, and it will ripple through to your slower time frames if it is a true change in trend. That's the nature of the way the markets work. So you're always, it's like the ripples in a pond. You throw a stone into a pond, the ripples move out. That's what you're looking for constantly, that effect, that trend confirmation, which is why we're constantly using multiple time frames in whatever we're doing, whether we're a scalping trader or we're a longer term trend trader. Just see what's going on in terms of the indices. They are trying to rally a little bit, but again, it's not terribly convincing. Just see what's going on the other side on Trading View. Have a quick look at the indices, currency indices there. Let's pull that over again. This is what's going on. That's the pound, remember, top left. So that's going sideways at the moment. The yen here has flattened off. That strong move, that's come to an end. The dollar is going pretty much nowhere, and the euro also is calmed down. So hence we are seeing not a great little price action there. Let's go back onto TradeStation, have a quick look around here. Euros at the bottom, Aussies at the top. This is on 4 minutes, so pretty quick. So we have a look at let's have a look at Euro Aussie. See if that's coming up to a potential reversal, maybe. Got a volatility trigger there. Just pop that up full size, see it a bit better. There we go. And one of the facets of the volume point of control here, which is this yellow dash line, which you've got on all the platforms, is when the price action moves into an area at the VPOC, and the VPOC is where price agreement has been reached. In other words, the bulls and the bears are in equal opposition. It's a tug of war where the two teams are equally weighted, if you like, and there is no clear bias to one side or the other. But at some point that clearly breaks down, and the market will then move away from the volume point of control and develop a trend. But whilst the price action is rotating around the volume point of control here, what it does is it develops these very strong levels of support and resistance. And they are denoted on the accumulation and distribution indicator, which is on TradeStation, on Trading View, and also on NinjaTrader. We can't develop it on MT45, unfortunately. The code doesn't allow us. We'd love to have it on MT45, but we can't. But what the accumulation distribution indicator does is it paints these levels for you and tells you instantly the strength by the thickness of the line. You might not be able to see them here, but I can assure you this is 8, this is 6, and there's another one beneath the VPOC here, which is 2. In other words, this level here has been tested 6 times and held from a resistance perspective. This level here has been tested 8 times in the past and held from a support perspective. And therefore, once the market breaks away, as indeed it did here, what you will often see, as you've got here, is the market reverses and retests that level, but it is so strong it holds from now we're looking at it from a resistance perspective, because it was a support platform, now it's a resistance area. And the point is that if you are a trader and you're looking for tactical ways to trade, trading breakouts or breakaways it's a very clean way and a very low risk way of trading. The downside is you have to be patient. You've got to have the patience to sit through these congestion phases. Now this is, what are we on here? We're on a 5 minute now. Okay, this is a fair amount of time. This could be a 1 minute, could be any time frame you like, but you have to have the patience to sit through those phases of price action. But the advantage, the big advantage to you as a trader is that once the market starts to break down, irrespective of where you ultimately decide to get in, which of these candles you get in at and at what point. The benefit is that you have this absolute mass of, in this case, resistance to any move higher. You've got the volume point of control itself, which is volume acting as resistance. And in addition to that, you've then got these price-based levels, which are also acting as resistance in any reversal, which you saw here. In addition to that, and perhaps self-evident, just move that out of the way, it also gives you the opportunity to place your stop loss with great precision. Now, ideally, if you have a narrow area like this and it fulfills your money management, you want to have your stop loss above the red line. You want to have it up here somewhere, because you've got this great mass of protection in place, really giving you huge protection in the case of any pullback or reversal. So it's a tactical approach that a lot of traders use, but as I would say, the one thing you have to have is you've got to be patient. You cannot force these. You've got to wait. As to where you pick your spot, it's entirely up to you. Once you start to break below this, then you start to see a decent close. You might be waiting. You might see this come, then you see this reversal coming in, lots of volume coming in under here. You know, this looks pretty weak. Down we go. Then you get the volatility trigger. This is not going to go very far, and it looks as though we've got a full-blown reversal underhand on our hands, purely based on the volatility. We've got some buying coming in here, and now we're starting to see this move develop. In addition to that, you've got low volume area here. You've got a low volume node. So if the market does rally through here, you expect to see it move through there pretty rapidly, because you've got very little in the way of volume acting as resistance. You've got these two levels, which are very lightweight in terms of resistance, these two blue dash levels, very thin, and then you're going to come all the way back up here. It's no surprise to see the euro, you know, really moving pretty much sideways, given we've got decent announcement coming up later. And of course, throughout all that, you've got the trend monitor at the bottom here, and the trend monitor transitions through to this bearish phase. And the important point about the trend monitor is we developed it to hold you and to give you the confidence to remain in a position without getting shaken out, because the mathematics of trading is very simple. I said last night that you can have, if you take 10 trades, you can have 7 losers and 3 winners and yet still be very profitable, provided those 3 winners are a decent size. The 7 losers have to be small size, the 3 winners have to be big size, and that's the way trading works. It's not a 50-50 game. It's not a 60-40 skewed in terms of winners. It's all to do with the size of the winners versus your much smaller losses and more frequent losses. That's just the nature of the beast. It is the way it works. So the trend monitor was developed with that in mind. You can see here we did transition into a darker blue, but it never came out the other side. It went back into red again, came out into dark blue, and then we've gone back into red, really just confirming the bearish nature of this move right now. So if you are struggling to find a tactical approach, and the other thing I'd also say, and we talk a lot about it on the Forex program, is you can be all things to all markets. You can take whatever tactical approaches you like to the market. You can be reversal trading, you can be trend trading, whatever it is, breakout trade, whatever. But a lot of traders will not only limit the number of pairs they trade, they'll also take one tactical approach to markets. So they may decide, I am only going to trade congestion. Now, you might think that's strange, but I can assure you, for the reasons I've explained here, it is a very powerful way to trade, but you have to have that discipline to sit through the congestion and wait and be patient. And not everyone has that. Let's face it, we're sitting here, we want to be trading, we want to be sat in the screens all day, if we have the luxury of being in front of a screen all day, and we want to trade all day as well. So sitting there looking at a screen and watching a price move sideways can be pretty boring for most, but I can assure you that's where trends are born. We explain it in great detail in the education program. That's where trends start. They start in congestion phases, always, and from there, the trend will then develop. Yeah, let's have a quick whiz round. Lots of volatility all over the place. You can see it here. Let's just move that out of the way. Let's pop up there. There we go. This was obviously the move yesterday. That was the BOC. So we're still, if you like, we are still actually technically still trading in the spread of that particular candle. which is no great surprise. See what the pound yen's doing. That's kind of ticking up. It's recovered its mojo. The pound is starting to move on the index on my right. Yen is still sort of flatlining a little bit. Let's have a look at what else we got down here. Dollar may be starting to move a little bit. But if you look at the dollar yen, you know, the dollar and the yen are pretty much moving the same direction. You can see it here. This is, admittedly, this is on 4, but there we are. You know, that's what's going on in terms of the dollar yen. So that certainly wouldn't be one to look at. Again, you've got volatility here. Lots of volume coming in. You know, it's not going anywhere. You've got wick to the upper body. Just open that up a little bit. Got a wick to the upper body. Lots of volume coming in. Oh, wait. Oops. Sorry about that. Let's get rid of that. There we go. Let's move that back again. Let's just go back onto Ninja. Let's just finally, just before we wrap up, let's head over onto the currencies pairs multiples again. There we go. That's the pound yen. So it is, you know, it's trying to pick up, but you know, I'm on 15-second here. Let's have a quick look at the volume. Got an absolute ton of volume coming in there. Just saw it corner of my eye. So we've got, you know, a huge candle here with lots of volume underneath it. You know, it's dangerous. Here's the volatility candle. If we break away from that, fine. If once we've cleared that, we're moving up into a low volume area at the top of the chart. The trend monitor is flashing blue, which is fine. Let's go up and see what else we've got in different time frames. Okay, not too bad. This is the one that would probably set the, here we go. This is on 10. This is the really the volatility trigger on 10. Huge amount of volume. We know the market makers are in there. The volatility trigger came in. We're still waiting. If we were going to jump into this trade now, what we're looking at, several things. We've got some pretty strong price-based resistance here. This is on the accumulation distribution again. If we were looking to jump into this now, we'd want to wait for it to clear this top probably through 55. If we get through 55 and onwards, that looks okay. We've got some buying coming in here. That looks okay. So if we get through 55, 56.50, 56.55 on through there, that might be the point at which you jump back into that particular trade. But again, you know, we're up at the, we're moving up into overbought here. And again, it depends what you want to do. We've got some decent move on the Swiss franc now. We've got buying on the Swiss franc. So if we went to have a look at dollar yen, that might be starting, dollar Swiss rather. Dollar's falling, Swiss franc's rising. So, you know, that might be one to have a look at. Have a quick look at that. Let's flip this over. There we go. So that's the move that's developing there. And again, similar sort of picture as I was showing you. There we are. You know, it's another kind of breakaway event. Again, defined very clearly, you know, the upper ceiling here, very, very strong level of resistance in place there on that particular chart. Not so well defined to the downside. In terms of jumping into that trade, you'd certainly be looking for a break below this level because you've got lows here, and you've got these two regions here. Once you're through that level, you're into low volume here, and that's the reason it's really moving pretty quickly, because you've got low volume here in terms of the VPOC, so you've got pretty much nothing in terms of, just pull this back a bit, there we go, see where we're going. Where are we going down to? Probably down to this point here. So it's a really nice strong move developing there, and the trend monitors transition through to bright red, and of course you'd have that in multiple time frames as well. Just drop that back out of place. Nice move. Now what have we got coming into play? We've got a volatility trap on 1. Just open that up. So, you know, in terms of further development of the move, nice rising volume under the move, but we've got a volatility trigger. So we're expecting the market to at least congest at that point, which is fine. That is only on 1 minute though. What you don't want to see is you don't want to see it on these slower time frames, because that will trigger the fact that we've got more heavyweight sentiment coming onto the market in terms of the effect that is like to have. We had a 15-second volatility trigger here. The 1 minute volatility will trigger the 15-minute. If we had one on 3, it will carry more weight than 1. If we had one on 5, that would be more than all of them, and 10 would out trump them all, and the daily one obviously is the heaviest of all. But in terms of the impact that is going to have on the trading time frame, it is always the slowest which carries the most weight, because time carries significance. And you can see the buying coming in here under the 3 minute, because you've got the wick to the lower body. We saw a little bit of it here. Then we're seeing more of it here with the volume rising. We've got a nice deep wick to the lower body. So we know for a fact there is buying coming into the market right now. Traders will have traded this, making money, closing out. Some of that will be taking profits. Some of it will be buying by the market makers, depending on the level of volume that we're seeing. But it's still got a little way to go on, let's just go back onto the multiple CSIs. We'll see it across the time horizons then. Where are we? There we go. Let's drop that out of the way. Wait for them to load up. When you have these when you have these workspaces, as I've got them here on NinjaTrader 8, what they will do is they will go into temporary hibernation because it's preserving processing power. So when you reload them, it will take a few seconds for them to reload, as it's done here. This is basically what we're seeing. We've got dollar Swiss, strong selling on dollar, strong buying on Swiss, selling on dollar, buying on Swiss, same here on the red and the green. And on the over onto 15, that's only just started. And it's back to where I started at the beginning to say that you have to be very disciplined in terms of what you're trying to do in this particular trade. If you're a scalping trader down here, you might well be out by now on the 1 minute and the 3 minute. You might say, right, that's okay. I've had enough of that one. That's fine. That was a nice reversal trade. You know, let's move on to something else. I don't know. Let's maybe have a look at, you know, sell on the Aussie yen. Perhaps you've got the yen at the bottom, Aussie at the top. You know, the pound's coming up here over on the 15 minute. We've got euro at the bottom, pound at the top. Well, we're going to look at a pound euro reversal. And that's what it's all about. It's constantly deciding what you're going to do in advance, do it. If it doesn't work out, get out and get on to the next one. It's as simple as that. That's it. I think we're going to wrap up there, just coming up to the hour. In terms of where all the bits and pieces are, you'll find all the indicators over here at quantumtrading.com for MT45, NinjaTrader 7.8, TradingView, and TradeStation. If you buy just one indicator from us, you will always get a credit in the future as an upgrade. If you want to upgrade to a bundle, or you want to upgrade to a full package, or you want to move, you've got some indicators and you want to move to the education program, absolutely fine. We always give you a credit for what you've purchased in the past. It's as simple as that. And it doesn't matter how long ago it was. It could be back, you know, when we first started 10, 11 years ago. It's absolutely fine. We have you on record. We know what you've bought, and we'll do it accordingly. So always bear that in mind. As I said before, we are working on, and if you invest in the full package with us, you get all future indicators we develop free of charge. Some of our customers have been with us for that long, and they've taken advantage of that, and they have 7, 8, 9 indicators they haven't had to pay for. Simple as that. If you had the TradingView package, you know, 2 or 3 years ago, you've now got all the other indicators we've developed, radar panel, you've got the currency strength, the cryptocurrency strength, and so on and so forth. It's as simple as that. As I said before, we are working on NinjaTrader. We are working on the market analyzer to port all the indicators across into that particular analytical tool, because it's extremely powerful, very useful, and we've been wanting to do that for some time. So that will be, I'm not sure whether it's going to be on 7, but I think it probably will be on both, ultimately, certainly on 8 at any rate. And we've also got some new indicators coming along for NinjaTrader also. So that's where we are at the moment. In terms of support, it's 365 days a year. We literally support you 24/7 because we have customers all over the globe trading different times of day and night. So it's literally 365 days of the year. And whatever you buy from us, that's it. You never pay for upgrades, whether it's for platform upgrades or for indicator upgrades. It's as simple as that. This was the education. This is quantum trading education. This is called the Complete Forex Trading Program because it is precisely that. It covers everything you need to know in depth to trade the Forex market with confidence. You've got psychology, you've got fundamentals, you've got relational, you've got technical, which is deep dive into VPA, you've got the mechanics of trading, and then you've got this huge library as well. VPA chart examples, how to use the indicators, pulling it all together, topic webinars, webinar library and resources. In total, I think there are something like 450 plus lessons. There's 250 to 300 hours of video in here. It is massive. And in addition to that, and we make no apology for that, because this is the stuff you need to know. It's all very well going on a program, you know, which is a couple of hours and you know, a few dozen slides and all the rest of it. This is what you need to know. You need to understand the bond market. I'm sorry, if that's anathema, but you have to understand the bond market because it's so critical to what is going on. You have to understand related markets. And in addition to that, it's all backed up with the VPA Trader Room, which is hosted by Anna and myself every day. Last year, we bolted on, around about this time actually, we bolted on the funded Forex program. And the reason we did that was two reasons. First of all, to give our students, and it's only available to students, this is not available to the public per se, this is only available to students on the funded program, to give our students the opportunity to trade our money. You can trade up to $2 million of our money. It's as simple as that. There is no risk to you. As it says here, why risk your money when you can use ours? Really, it says it all. And the reason we did it, first of all, to give you the opportunity to leverage your knowledge as a student, but secondly, and just as important, to give you the feel of managing and trading much, much larger accounts than perhaps you would normally. It goes all the way up to 2 million. You start down here at 5, 10 or 15,000. This is what we call the evaluation stage. And it is that because you are evaluating yourself in that you have been through the program and you have a consistent tactical strategy that you are applying to the markets and you're consistently able to do that. And we are obviously evaluating you. We don't want to lose our money, and we don't want you to lose it either. Of course, there are rules and risk and money management rules in here. Of course there are, but you decide the level you start at. You can either start at 5,000, 10,000, or 15,000. Your choice. There is an entry fee. That's it. Once you've paid that, there is nothing else. You can't lose anything else. That's the cost of entry. Once you complete the very simple targets that we set, profit-based targets, that we set on these accounts, we then multiply it by 4. So if you start on the 15,000 evaluation account, you go up to $60,000 of our money. You can only trade the 28 pairs at the evaluation stage, but once you progress to the portfolio manager level up here, you can trade indices and you can also trade gold. And thereafter, we double the amount you trade. So once you've hit the first level on the portfolio manager level stage, you go from 15,000 to 60,000, which is level 1. We then double everything, so you go 60, 120, 240, 480, right the way through to 2 million. You earn as you're trading. At the evaluation stage, you get a 35% kickback, which comes as a single payment once you've achieved the profit target. On the portfolio manager's levels, you decide when you want to take the profits, and that's paid out monthly, and that's paid at a rate of 50%. And when you get up to the top levels of trading $1 and $2 million, that's paid at 60%, again on a monthly basis when you want to call the funds off. Simple as that. So you earn as you're going. All explained here, but as I say, it's only available to quantum trading students. Simple as that, and won't be available to the public. You won't find it anywhere on the internet. Finally, Anna's site, annacooling.com. This is where you'll find all the analysis that we do down the left-hand side. Anna is actually in the process of setting up a specific Twitter feed. So we will actually be splitting out the Forex components or the Forex markets from everything else we do, indices, commodities, and stocks. We'll be going out on the normal feed. There'll be a new Twitter feed, which will be purely Forex analysis, Forex based, and what's going on in the Forex world. And primarily on Anna's site, you'll find pretty much, as I say, stocks, commodities, and indices, but all the books are there up on Amazon. I have to say, we are truly humbled by the number that we sell, but also more importantly in the comments that people leave. Very, very humbling comments. You can read them for yourself up. There's so many 5-star reviews. It truly is amazing. And you've got all the links here back to the various sites. The books, by the way, are available in both Kindle and in paperback. So that's it. Thank you very much indeed for coming along today. Hope you've enjoyed it. We will be back next week. I think we're probably going to stick to these sorts of time frames. So late Wednesday night, evening for us for stocks, and early Thursday morning for Forex. But as always, you'll get the details on the email. So don't worry, you'll get full details of when and where. Thanks very much indeed for coming along today. Hope you've enjoyed today. Enjoy the rest of the trading session, the rest of the trading week. Stay safe, look after yourselves, and we will see you soon. And bye for now.